If you took any amount of money, take $100 million in the year 1900 and invested in any currency in the world, you would have lost 100% of your money in every currency except for the dollar or maybe the pound. Every currency collapsed. The winner of every war in the 20th century was the United States. And so the winning currency loses 99.5% of its value. Everybody else, you lose everything. Now, if you put that money in gold, there's a 95% chance it would have been seized in the 100 years, because there's only a couple of cities on Earth, maybe Zurich or Geneva, where you wouldn't have had it stolen, and maybe then they still would have stole it, you know, if you were the wrong citizen in the wrong country. If you were a Swiss citizen in Switzerland for the 100 years, you might have kept the gold. But, you know, Churchill seized the gold. Roosevelt seized the gold. If you'd lived in Germany, you would have had your gold seized multiple times. In Japan, they lost it 2 or 3 times. In Russia, you know, count the number of times. So there's nowhere on Earth where you could have kept your gold. And now you're stuck with, okay, well, where do you invest it? Land? Take $100 million worth of money and buy land in Florida. Tax bill's $2 million a year. If you buy property in Florida, it's 2% property tax a year. It gets assessed up every year. You have the ownership of the land for about 20 years before the government takes it back from you. You don't own your
plus the
your
maintenance
property
of the land. Right?
Yeah, plus the maintenance. So if you want to move money through time, how do you do it? You can't do it with the currency. The money is broken. The money was always broken. It's been broken for 100 years, losing 7 to 10% of its value. But in hyperinflating economies like Venezuela or Argentina, fill in the blank, the money loses 20, 30, 40% of its value a year, sometimes 80% of its value a year. In that case, you can't even carry money for a decade. You might not be able to hold money for a year in those economies. The Russian ruble's lost 35% of its value in the past few weeks, right? That's how fast it collapses. So fundamentally, we have this issue. I want to move money through time. I have a 100-year time frame. I'm an institution. The whole point is an institution is supposed to go on, right? And so how do you do it? No currency will work. Can you use gold? Well, gold as money is the best idea humanity had for like 5,000 years, but it's not a perfected idea. The problem with gold is gold miners produce 2% more gold a year. Okay, that's no better than the state of Florida seizing 2% of your property a year in a property tax. The half-life of gold, therefore, becomes about 30 years. You divide 2% into 70. In 35 years, your money's cut in half. Hold it for 100 years, it's cut in half 3 times. The second problem is it'll be stolen by a criminal or a politician that disagrees with you. And the third problem with it is that gold is a property you have to put in a vault. And if you have to put in a vault, then the counterparty, the bank, is able to hypothecate it and rehypothecate it, which means they basically sell 100 ounces of gold paper for every ounce of gold you hold, and they keep shorting it naked, and they hold the price down and manipulate the price. You can't hold your own gold. So ultimately, the problem with gold is holding money in gold over the course of 100 years is going to lose 85 to 90% of your wealth under the best of case. The other problem is you can't move money through space with gold. I need to move money through time and space. I need to hold it for 100 years, and I need to move it from here to Tokyo. If I want to move, you know, $1 billion of gold is like 30,000 pounds or something. You want to move a bunch of money through space, it's going to cost you 3 to 6 months and $5 million to move it once. If you want to move it through time, you're going to lose 80, 90% of your money through time, and it's going to be seized. So gold's a pretty expensive way to move money. Currency is an ineffective way to move money. Property is only good so long as the nation state that the property is in chooses to allow you to continue to possess it. But of course, the oldest story in the world is, oh, we lost the family farm because we couldn't pay the property taxes. You can hold the land. buy 10,000 acres of land, someone moves in and sets up shop next to you, they incorporate a city, then they bring 50 people in the city, then they make themselves mayor, then they pass a property tax, then they annex your farm, then they give away free money to anybody that wants free housing in the city, then they double your property tax, so you can't pay your property tax, then they seize the property because you can't pay the property tax. So ultimately, property is not a very effective way to hold money for a long period of time, and you can't move money through space. So this is a problem. I started going down this rabbit hole of thinking about what is money when I realized that I was in essence going to lose my company, right, and destroy the livelihoods of all my employees and waste 30 years of my life. And so when I started thinking about it, and it's helpful when Jerome Powell says, when I'm thinking about raising interest rates, your strategy of investing in bonds is broken. When I started thinking about it, what I realized is money is energy. Money is economic energy, socio-political energy. Currency is a medium through which the energy moves. If you wish to hold energy and transport energy, you need a technology. We're not using gold anymore. When we use gold, as I pointed out, it's expensive and it's cumbersome. Currencies don't work. The US dollar is the strongest currency in the world, but is losing 15 to 20% of its value a year. The peso is losing 40 to 50% of its value a year. The bolivar is losing 100%, 95, 98% of its value a year. So once you start thinking about it that way, you start thinking, well, what's a better way to store economic energy through time? And you realize that the currencies don't work, gold doesn't work. So what is money? Well, money in the last 30 years became the S&P index. You buy a diversified portfolio of companies, of stocks, which is a little bit better because maybe you're getting bled 2% a year by the management team, but the company's making money, and so maybe you can hold value. It turns out that the money's losing about 10% of its value a year, and the S&P index is going up about 10% a year. And you look at that for 100 years, and there's a very interesting correlation there. A diversified portfolio of assets is tracking the money supply. Okay, interesting. What's the problem with that? Well, the problem with holding stocks as a store of value is if the stock goes up by a factor of 10, there's a management team that has a fiduciary obligation to issue more stock. There's a temptation to issue stock. Stocks aren't scarce. The amount of equity shares will also go up. If the stock is overvalued versus the fundamentals of the company, the CEO is almost certainly going to issue more stock. And so that's one problem. The second problem is stocks have political nexus. They have management teams. They're in countries. They can be unionized. I can put a tariff on the product. I've got a competitor. What if the CEO goes bonkers? All sorts of interesting problems. What if the company gets expropriated by the government, or the jurisdiction it operates within? So stocks are an imperfect approach, better than gold,